Hi, and welcome to the Park City Bookkeepers video about the statement of cash flows. Today we're going to be discussing what that report is and why it matters to you as a business owner. So today, in order to really understand the statement of cash flows, you need to understand the other top two reports, and that is your profit and loss, otherwise known as the income statement, and also your balance sheet. So right now I have three of those pulled up now so we can take a look at all of them. And the reason it's important to understand your profit and loss and balance sheet is because the numbers off of your statement of cash flows actually comes from these two reports. So if you take a look at the very top line item in the statement of cash flows, you're going to see net income of $1,642.46. Well, where else would you see this number? Well, you actually will see it as the bottom line number on the profit and loss, and you'll also see it in the equity section of the balance sheet. So let's go ahead and talk a little bit about the statement of cash flows and how it varies from the income statement. The income statement is going to show your basically your profitability. It's going to take your sales minus all of your cost of goods sold and expenses to give you your profitability, but that does not take into account your actual cash flow because your business will likely be on an accrual basis, and that will affect how your reporting is. So we'll get into that in just a moment. If you take a look here, the net income is your first line item on the statement of cash flows, and then we have adjustments to reconcile net income to net cash provided by operations. And what this means basically is that you have adjustments based on what is actually happening with your cash in your operation. So your accounts receivable, you'll notice over here on the balance sheet, is the same amount, but it's a positive number, not a negative number. And so what this means is we have $5,281.52 in receivables from our customers, but we haven't yet received that cash. And so we actually subtract it out of the net income figure where it has been recorded. Okay, the cash hasn't been received, so we have to subtract it out. Same thing with inventory asset. Accounts payable, you'll notice, is a positive number. And it's the same reason why, but in reverse. So we have booked $1,602.67, and you can see it here in the liability section on the balance sheet. And so we have that many, we owe that much to vendors, but we haven't yet paid them. So we're going to add that back to our net income figure. MasterCard's another liability, so we add that back. Board of Equalization payable, that's another liability, and we add that back. And same thing with the loan payable. And that gets us to our net cash provided by operating activities. So operating activities is actually one of three subcategories on the statement of cash flows, and it is arguably the most important of the three categories. The next two is investing activities and financing activities. And both of these, while important, really it's not as critical as the operating activities, because that's really the nuts and bolts of your business. And you can see here investing activities, you can see truck original cost, and we have subtracted out a $13,945. And over on the balance sheet under fixed assets, you can see that asset is there for the actual $13,495. Okay, and here we have to subtract that asset out. Financing activities, you'll see notes payable. We have it booked on our balance sheet right here under long-term liabilities for notes payable. It's a liability on the balance sheet, but we haven't yet paid that liability, so we go ahead and add that back to our statement of cash flows. Once we actually pay that, the liability will go down or completely away, and we won't be adding back anything under the financing activities for notes payable. So The important thing to remember is that statement of cash flows is talking about the actual cash coming in and going out of your business. And eventually we get to the bottom where we have cash or net cash increase for the period and cash at the end of the period. Okay, and that's going to tell us, where we started and where we're at now. So as you can see, net cash increase for the period is $4,063.52, and we had a zero starting balance. That's why the cash at the end of the period is the exact same figure. So if you have any questions, ask in the comments below, or feel free to contact us to see how we can help you further understand your reports. Thank you.